Greetings. This is a work on forex trading, stock, option, and all chart related trading. This work is done by Twegbe Eizoge. You can contact us on 080 375 97085. You can contact us via WhatsApp on the same number. We are based in Lagos. You can reach us from any part of the world for training, account management, or for general consultation. So you're advised to subscribe to this channel. You're advised to view all our broadcasts. Important chart patterns. Today's topic is important chart patterns. So what to trade is basically charts. So but chart takes different patterns. When looking at the charts, it appears uncoordinated, it appears scattered, it appears incoherent. But if you look carefully, you discover that there are patterns that can be read. And this is what we are going to study today. Important chart patterns. So chart formation helps us to spot condition of market breakout and condition where market is likely to continue in the current direction, as well as the possibility of market reversals. There are a lot of chart patterns anyway, but most common is what we call the double tops on the double bottom, as well as the head and the shoulder. So let's see how to spot double top, for example. So let's pick this. This is a double top indicated by this arrow. Let's take the other one. This is another top. So this is a double top formation. You see, this is a top, this is a top, and this is also a top. And this is also a top. So let's look for another design of a double top or a double bottom. This is a top, for example, and this is also a top. So that is double top. Let's look for double bottom. This is a double bottom, and this is another bottom. So those are good examples of double top and double bottom. And if you look closely through your chart, you find some of this pattern very, very often. They may not necessarily be equal. They may not necessarily be equal, but they have to be of the same zone. It's another double bottom. So now there are a series of examples. These are all double bottoms. This is a double top, and this is another double top. So the issue is this: double tops and double bottoms have what we call an M-like shape. The tops are peaks which are formed when price hit a certain level that can't be broken after testing twice. The tops are peaks which are formed when price hit a certain level that can be broken after testing twice. It is a reversal pattern. After an extended move, so it indicates that the buying pressure is just about to finish. So when you see price moving in a certain direction and stopping at a peak and goes back and move upward and stop at that same peak, it indicates a double top. It's an indication of a possible price reversal. And in the case of a double top, it means that price is reversing downward. And this is what transpired at this point. When price got to this point a second time, it went downwards. Same thing with a double bottom. The price came down to this point, hit this bottom, went up, came back down and hit this same bottom. Getting to this same bottom, it went straight up. See, that is how it operates. So how do we enter the trade? The moment we spot a double top or a double bottom, we wait for the candle to reverse. We wait for the candle to reverse. We identify what we call the neckline. A kind of an horizontal break. So this candle, for example, indicates a break of the neckline. So the moment we have a reversal candle, we enter the trade and see what it will end up like. And you see that the market moves straight down. So that is how it works. In case of a double bottom, you see that when the market gets to this neckline, for example, it breaks above it at this very candle, and went straight up. So you see the double top and the double bottom are very, 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 very important. We place entry order below neckline. So the drops are approximately same height as the double top formation. So that is how it works. It is simple and very, very effective. So all you need to do is go through your charts, either the 30 minutes chart, the 1 hour chart, the 4 hours chart, depending on what you trade, and look for patterns like this. And the moment you spot them, trade them, and you won't regret that you do. So that is that about double tops and double bottom. Let us trade the head and the shoulder. The head and the shoulder is also a price reversal pattern. It is similar to the double tops and the double bottom. The only difference is that it is formed by a peak, a first peak, which is the shoulder. It is followed by a higher peak, which is the head. and it is then followed by another lower peak, which is another shoulder. So let us look for a living example of this. Let's look for a living example of this. This is a good example of a head and shoulder. For example, this represents the head. This represents the first shoulder. This area represents the first shoulder. While this other area represents the second shoulder. So shoulder 1, shoulder 2, shoulder 1, the head, then shoulder 2. So it is formed by a peak, which is the first shoulder, followed by a higher peak, which is the head, and then another lower peak, which is what? A shoulder. So what we do in this case, we connect the neckline, which is either up or down slope. So we take an horizontal line, for example, and connect the neckline. In this case, this is the neckline. The neckline touches the two shoulders. So we connect the neckline, and the moment price breaks below the necklines, we enter the trade. And this is what happened at this point. And you see the effectiveness of the pattern. The market moved downward, giving us tremendous profit. So entry order is put below the neckline, and trade profit is measured as the height of the head and shoulder from the neckline. So let's look for an inverse head and shoulder pattern. That is a head and shoulder pattern that is upside down. So an inverse head and shoulder pattern. These are double bottoms. Double bottoms are even more common than head and shoulders. So double bottoms are more common than head and shoulders. But that notwithstanding, they are very, very effective trading strategy, and I advise you to look for them while trading. There are a lot of them in the charts. This is another good example. It does not necessarily have to be equal. This is a shoulder, the bottom shoulder. This is a head. This is a head. While this is a shoulder. You see what happens? The market went down. It was strongly, but eventually it went down. So that is how it is. So there are other patterns like wedges. We have the rising wedge, the falling wedge. We have the rectangle. We have the triangles. We have the ascending and descending triangles. These are some of the topics we're going to treat in our next class. I hope you enjoyed the class. If you have any question, please do not hesitate to let us know. Contact us and ask your questions. I'll be glad to answer you. These patterns are very simple to identify and very, very profitable. Thank you very much for being a part of us. Remember to subscribe and remember to share so as to encourage us to do more. Thank you.